What's up, guys? In today's video, I'm going to explain what is final expense insurance, or sometimes called funeral insurance, what it is, and is it worth it? So with that, let's just jump right into the video. Okay, so what is final expense insurance, or burial insurance, or funeral insurance? You may have heard these different terms before. I'm gonna let you guys in on a little secret. All this is a marketing gimmick from insurance companies to market a product as being catered towards an older demographic, that they try and make it believe that you need this because it's funeral and it's final expense and take care of your family and you don't want to leave something behind. And I'm not saying that's a bad thing, I'm just saying it's a big marketing gimmick. All final expense insurance is, or funeral expense, or whatever you want to call it, it's usually either a simplified issue life insurance product or a guaranteed issue life insurance product at a smaller face amount, usually $2,000 to $50,000, in a permanent life policy. That's all it is. Now, it's usually marketed towards older people, like I mentioned, and it's marketed in a way where it makes a consumer believe that they need this insurance, because if they don't have this insurance, they're being selfish and they're not thinking about their family, and it is a little bit of a marketing gimmick. Now, before I go on, maybe I'll explain the different types of underwriting for life insurance products so you can kind of understand what I'm talking about. Because I mentioned simplified issue and guaranteed issue, and you may have heard these terms before, but you may have not heard these terms before. So I'm just gonna talk about them real quick here. So there's basically 4 different categories of underwriting that you can get with life insurance in Canada. And it doesn't matter if it's term or permanent, that doesn't matter. What matters is the actual underwriting. And so let's get into this. The first one is just a traditional life insurance company at a traditional rate. So this would be like if you went to any traditional company, Manulife, RBC, Equitable, and they quoted you, let's say $100, and you applied and you're healthy, everything else is in good standing, then you get approved at $100. It's a traditional life insurance company at a traditional rate. That's the first one. The second one is a traditional life insurance company at a rating. So same thing, you go to the company, they quote you $100. However, due to some adverse health conditions, they come back and they say, you know what, we quoted you 100, we'll give it to you at 150. We're gonna rate you this extra amount based upon your current health conditions. The third option is something known as simplified issue. Now, simplified issue is essentially a few different carriers in Canada have put together products where instead of going through a long application process and doing a medical, they're going to lump different risk categories together based on a set questionnaire. So as you go through this questionnaire and you answer more questions no, the better rates and the more coverage you're eligible for, until you finally get to a section where you may answer yes to a question. In that case, they will lump you into that risk category along with a whole bunch of other people that are in that risk category. And sometimes you may win and sometimes you may lose depending on what condition you have. But overall, they'll lump you into this category. You usually don't have to do a medical. The rates are a little bit higher and the coverage amount is a little bit lower. With traditional insurance, you can usually get up to 20 million. With a simplified issue product, you're gonna be capped at around 1 million. So it's actually substantially lower for face amount, okay? However, there's no medical, it's less questions to go through, it's a quicker application process, and depending on what health conditions you have, it may be cheaper than going to a traditional company and getting rated from them. The fourth and last type of underwriting that we have here in Canada is guaranteed issue products. Now, guaranteed issue products are kind of last case scenarios where essentially you have a lot of really adverse health conditions. You can't qualify for anything else. The coverage amount is usually, like I mentioned, anywhere from $2,000 to $50,000. It's substantially lower, and most carriers that offer a guaranteed issue product will have a 2-year waiting period in there, where if you did pass away within the first 2 years, they wouldn't pay out the benefit, but they would return the premium. So not all is lost, but they wouldn't pay out the benefit. So they do have a little caveat there. The rates for this type of product are usually much higher, and depending on how severe some of the health conditions are, it could be worth it to just put your money into a savings account and not purchase this product. Sometimes the payback with some of these is like 5 years, where if you just put that premium into a savings account within 5 years, you'd have more money. So sometimes it doesn't make sense in that scenario. So let's get into final expense insurance. You may have seen this marketed online or marketed wherever, and you're thinking, that seems maybe like a good idea. Maybe I should check that out. How much does it cost? Well, it's based on a variety of factors, of course, age, gender, smoking status, and health conditions. And this is where it gets a little bit tricky, because most companies that are offering this final expense insurance are usually going to offer it as either a guaranteed issue product or a simplified issue product. And we know that both of those products are more expensive. So if you're a healthy individual, just because you're older doesn't mean you need to get final expense insurance. You can go to a traditional carrier and it may be substantially cheaper to get a product through them, which is still, you can use it for final expenses. Remember, that's just a marketing gimmick. You don't actually need to do that. And it might be cheaper just to go through a traditional carrier. By the way, if you guys are looking for term life insurance quotes, you can visit affinitylife.ca and you can actually view quotes 100% online without having to put in your email. You can just view them. There's no curtain that we put it behind. And you can actually apply 100% online as well. So I'll put that link in the description below. Okay, so is final expense insurance worth it? Well, it really depends on your specific scenario, and it depends on if you're healthy or if you have adverse health conditions. But I'll give you an example and maybe you can get a little bit of idea here. So I ran a quick quote here and I'll just read off some numbers here real quick for you. So this is a 60-year-old male, non-smoker. He had a heart attack in the last year or so. It's suffice to say that he has some adverse health conditions, okay? And we looked up $50,000 of coverage in a permanent life policy, okay? Because most of those guaranteed issue products are gonna be permanent life. And this specific one is pay until 100, meaning that he needs to continue to pay this premium every single year until he passes away or the insurance will be canceled, okay? In this scenario, it's $2,784 a year for $50,000 in coverage. And you have to remember, 2 of those years at the beginning, it's not gonna be covered. The premiums will be returned, of course, but the face amount's not covered. So he's really not covered until that 3rd year, okay? So we can do the math here very quickly and we can see that after 18 years, that's gonna be $50,000 in premiums paid. And now in that case, I mean, it's tough to say. That's an individual case-by-case basis. I mean, if you were 60 years old and you had just had a heart attack, are you gonna live 18 years? Maybe, maybe not. It really depends on how you're feeling. I mean, is it a debilitating heart attack, or are you gonna get back on your feet and maybe try and start exercises and eating healthier and getting your cholesterol down and going to the doctors and trying to improve the rest of your life? So is it worth it? I don't know, maybe, maybe not. I guess it's in your specific scenario. However, if we use this same scenario and we had a 60-year-old that was healthy, they could go and get the same type of policy at a substantially lower rate from a traditional carrier if they were healthy. So what I would say, if you're looking at final expense insurance and you're healthy, don't look at final expense insurance. Go to a traditional carrier and get traditional life insurance. It'll be much cheaper. If you guys are enjoying this content, all I ask is that you give it a thumbs up. And if you guys have any questions, feel free to put them in the comments below or reach out and connect with me. And with that, I'll see you guys in the next one.